Next up, we have the GBPUSD. First and foremost, I'm just going to take you from top to bottom. So starting on the monthly time frame. Now, monthly time frame, GBPUSD, I've got all my levels on here, which are going to be adequate for quite some time now. We've had bearish momentum for over nearly 2 years now. Brexit caused major damage, and I'm looking at this, looking for the GBPUSD to go a lot lower. Weekly perspective, what we have is 1, 2, 3, 4, 5 prior weeks where we've spiked up and beyond on 2 occasions, but we spiked up and around 1.3320s. So we've got the weekly resistance. Just ignore this. I need to go ahead and just do my updates on my labels. The end of last week, we had a shooting star formation. So we've had consolidation. We've been trapped in this zone, which is around 300 pips. We had a shooting star. We've spiked more or less to the absolute T, the 8 moving average. So it's telling us that there's potential for further downside momentum. We can't really see too much from this weekly though. However, if we step down to the daily, things become a lot clearer. So daily time frame, I've already gone in and highlighted the last lower swing high. So we have 1, 2, 3. This is an evening star formation, which also accounts for a lower swing high. Over here we have a tweezer top formation, again accounting for a lower swing high, and obviously we have this over here, which is a 3-pin pattern, 1, 2, and 3, also accounting for a lower swing. So we've got swing, swing, swing. After a lower high, what's expected? A new lower low. The most significant and recent lower low is in fact here. So we're looking at GBPUSD, medium-term projection on the daily time frame to come maybe to the weekly area of support. Again, just ignore this label over here, but we're looking at 1.2780s and maybe even lower as well. So we can have, just by judging the overall momentum, and I forgot to add in there, moving averages are crossed over on the weekly, the daily, and the monthly, so it's a strong downtrend. Going further down into execution time frames with this one, I've literally just spotted this 7 minutes ago, just as the 4-hour candlestick closed. So what we have is the moving averages are down on the 4-hour as well. I'm just going to go ahead and say my downside target for this one, just to be safe for the example, is 1.2850, blue level of daily support. And what we have for our actual entry now is we have 1, 2, 3. So we have a 3-pin pattern bearish formation. And we also have this bearish engulfing. So today we've come up to the highs, we've retested, we've got this minor area of resistance across here, and you can see where the crosshair is right across here, where we've came into as support. So we have it as resistance where this doji is, and we've came up to that zone today. 1, 2, 3. After the 3rd candle, we can go short. So here it is, guys. So let's see how this one plays out. So again, risk reward tool. I can in fact keep that there. We have the stop. So the high of the wick is 1.3093. So I'm just going to go 20 pips. I'm just going to go here. 1.3115. So that's my risk overall, which is 115 pips. So taking that into consideration, remember on a 4-hour time frame, we're going off the daily lower swing high. So we're going to have to allow this one to breathe. First target is going to be 1.2850. However, remember it can come all the way down to weekly support as well. Firstly, I'm going to go for this target because it's a 1 to 1.4 risk reward ratio. So GBPUSD short. I've gone through the reasonings. Let's see how this one plays out. Hi guys, to the GBPUSD short trade that we executed last week. Now, please excuse some of the modifications on the chart. You may notice from the last shot that the monthly support and so on may be slightly off. What I've actually done in the last few days is go into the charts, go through all of my analysis and give it a great update on 4 or 5 of my currency pairs. More so, well, mainly for these videos, to be honest. So I've modified some of my monthly levels, my weekly levels, and I've just neatened things up a little bit and just got up to date really with some of the price action. So let's see how this went. Now we entered, the entry was over here. Okay, we went 1, 2, 3. This was a 3-pin entry off an area of resistance, and we have in fact came very shy to our projected target level, which I'll get into in a moment. But so we went short, and we chose to place a stop loss around 20 pips above the middle wick there. So we have 1, 2, 3. This is the three candle formation. We went short. Our target zone we put around 1.2850s, I believe. I think that just slipped a tiny bit as I was doing the modifications, but it was around here. So what actually happened is we came into profit, more or less, I would say 40%, and this was due to fundamentals. We've seen a spike. We spiked back up to around 1.3, 1.3020 zone, and we've seen a bearish engulfing candlestick formation right after. Now, that was a Friday, and that was off some US data. Not just GBPUSD jumped, but some of the other majors did as well. So we got that. We let the trade breathe, stay calm. That's why you have to think about your trades before you actually enter them. We know the trend's bearish overall, but there's a huge area of support right here. As you can see, if I zoom out, this is where the support lies. Anywhere across here, really, even on these wicks, okay, this whole block is an area of support. But I've attached my daily level around here. So I knew there would have to, you as a trader and me, because I actually placed the trade, would have to be quite careful around this zone. So what's actually happened here, okay, is that the Friday we've dragged down, and this was Monday. This is Monday's price action around here, where we've fallen probably around 40 pips, 50 pips. Now with this one, because I knew that these are substantial lows, okay, we're talking years and years and years now, this was either going to break quite violently and go even lower, maybe to the weekly support level, or in fact it was going to bounce. So what I did on Monday evening, I brought my stop loss from all the way up here at 3113, 3150, and I brought it 50 pips in. So my stop was around 1.2950, okay, just above. See here, 1, 2, 3. We can see the pattern once more. If I can just zoom in on that for you guys. 1, 2, 3, and more so because the trade, the currency pair, had already ran more or less past 50-60% of its overall move here. So we were looking at 151 pips. We came down to 1 point. So basically, we came 14 pips off the actual target before this sudden rush here on the Tuesday morning. It's currently Wednesday today on this video. So what I've done, I brought my stop loss down. I've seen it. Give me a pattern here, 1, 2, and 3. I didn't want to risk something like this happening again, like I experienced on Friday, which we did get the next day. So I was more or less stopped out at 1.2950 on this trade. Better safe than sorry. I could have took maybe an extra 60 pips on this one, but overall I'm quite happy with the result of 50 pips. Okay, I wasn't expecting this to pan out for too long, but hey, it happens. Okay, so even if I didn't move my stop loss, if we look at the price action today on the Wednesday, we came shy of our stop loss over here, and now we're floating around break even anyway. So it's better to take 50 pips than to be in a trade wondering, okay, I'm really frustrated. I didn't act on my trade management rules and maybe locked some profit in. So as I've already said in the other videos, we don't go broke when we take profits or move stop losses down. So move the stop loss past break even on this one. We came 14 pips shy of target, and now I'm out of this. I can't see anything. We could get a reversal, as you can see here, as we're spiking and pinning nicely. Monthly support 1.3 and round numbers again there. So successful trade, plus 50. We could have went for 150, but it happened. It's cool. So that's that one, guys.